BMNR crashed 47% in 1 month. Ethereum's bleeding. The entire crypto market lost over $1 trillion in 45 days. But while everyone's panicking, I just uncovered something that changes everything about this drawdown. BMNR dropped their earnings report on Friday with three major announcements that nobody's talking about. And one of them makes BMNR the first large cap crypto company to ever do this. I've been researching this all weekend, and what I found could explain why this might be the buying opportunity everyone will regret missing. Let's break it down. What's up, everyone? I've been diving deep into the BMNR situation this week, and I need to share what I discovered. Look, the price action has been absolutely brutal. I'm not going to pretend otherwise. BMR is down 20% this week alone. The charts look terrible. But after analyzing their earnings report, reading through the technical data, and tracking what major institutions are doing behind the scenes, I found some patterns that are genuinely surprising. By the end of this video, you'll understand why this crash might actually be setting up one of those rare asymmetric opportunities. Let's get into my analysis. Alright, first let me show you the damage because we need to establish context. I pulled the numbers. BMNR is down 47% over the past month. That's a massive drawdown by any standard. But here's what caught my attention. This isn't isolated to BMNR. I started tracking the broader crypto market and I found something interesting. The total crypto market cap peaked at $4.27 trillion on October 6th. In just 45 days, $1.3 trillion evaporated. We're now sitting below $3 trillion. Bitcoin hit $124,000 back in October. Today, it's at $83,000. That's a 33% drop in weeks. So I started digging what triggered this. After researching multiple sources, I found that there was a liquidation event on October 10 that cascaded across the entire market. A stablecoin pricing error on one exchange triggered automated liquidations that wiped out nearly 2 million accounts. Market makers lost massive amounts of capital, which reduced liquidity across the board. Less liquidity equals more volatility, and that's what we're seeing play out right now. But here's where my research got interesting. I compared the current fear and greed index to historical crashes. Right now, the sentiment is worse than the FTX collapse in 2022. That made me pause because historically, when sentiment reaches these extremes, it's marked major bottoms. So I started looking at what's happening beneath the surface, and what I found completely contradicts the price action. I analyzed Ethereum's on chain data, and here's what jumped out. Transaction volume is at all time highs, over 35 million daily transactions. Despite the price crashing, actual usage is accelerating. I compared this to previous bear markets, and usually when price drops, usage drops too, but not this time. That's a bullish divergence. Then I looked at staking data. Ethereum staking just hit an all time high, more ETH is being locked up than ever before. Why does this matter? Because when supply gets locked in staking, it's removed from circulation. Basic supply and demand. But here's what really got my attention. I found that Ethereum's market cap is now equivalent to Coca-Cola. Think about that for a second. A technology infrastructure layer processing 35 million transactions daily, being adopted by major financial institutions, is valued the same as a beverage company. When I mapped this against historical comparisons, I found that Ethereum's market cap relative to its total value locked in the ecosystem is at levels we've only seen at major bottoms. Now, this is where my research took a major turn. I discovered that BlackRock just filed paperwork in Delaware to launch a staked Ethereum ETF. Not just an Ethereum ETF, a staking focused one. I started digging into what this means. BlackRock manages trillions of dollars. If they're launching a staking ETF, they're going to be locking up massive amounts of Ethereum supply to generate yield for their clients. I modeled this out. When institutions stake ETH at scale, two things happen. Number one, supply gets locked up, which is bullish for price. Number two, staking yields go down as more validators join, which is neutral to bearish for yield. But here's the key insight I had. If you're an institution, you don't care that yields drop from 3.5% to 2.5%. You care about total return, price appreciation plus yield. So I started connecting the dots. Major institutions are preparing to accumulate and stake Ethereum at these lower prices. That creates a supply shock scenario. Then I looked at exchange reserve data. In the past 30 days, 700,000 ETH left exchanges. That supply being moved into cold storage or staking contracts. Based on my analysis, we're seeing the early stages of institutional accumulation while retail is capitulating. So I went through BMNR's earnings report line by line on Friday, and I found three announcements that completely changed the thesis. Finding number one, Maven Validator Network. BMNR announced they're launching their own staking infrastructure called Maven. goes live Q1 2026. I researched what this means. Instead of using third party staking providers, they're building their own validator network. Why is this significant? Control and economics. They can optimize for their own needs and potentially offer staking as a service to other institutions. I calculated the potential. BMNR currently holds 2.9% of all Ethereum supply. That's about 3.5 million ETH. At even a conservative 3% staking yield, that's over 100,000 ETH generated annually. At today's prices around $2,700, that's $270 million in annual passive income just from staking. Finding number 2, dividend declaration. Here's what surprised me. BMNR just declared an annual dividend of 1 cent per share. Now, I initially dismissed this as insignificant, 1 penny, who cares? But then I realized what this actually does. BMNR is now legally classified as a dividend paying company, the first large cap crypto company to do this. I researched the implications. This opens them up for inclusion in dividend focused indices. Pension funds and institutional investors who are restricted from investing in non dividend paying companies can now allocate. This isn't about the current amount, it's about the infrastructure. Once staking goes live and they're generating hundreds of millions in yield, they can scale that dividend significantly. Finding number 3, strategic timing partnership. BMNR announced they've partnered with Tom DeMark Analytics to optimize their Ethereum purchase timing. I looked into this. Tom DeMark is a legendary market timer. They're essentially bringing on systematic timing expertise to optimize their capital deployment. This tells me they're not just blindly buying, they're trying to maximize efficiency on their accumulation strategy. Now, I'm not a hardcore technical analyst, but I did notice a few interesting patterns worth mentioning briefly. Multiple technical indicators I've been watching are suggesting we're near capitulation levels. Historical bottom signals are flashing across several metrics. The key thing I focus on: Ethereum and BMNR move together. They have about an 80% correlation based on what I've observed. So, if Ethereum recovers from these $2,700 levels back to $4,000 or higher, BMNR should move proportionally. That's a simple 48% upside on ETH, which could translate to significant gains for BMNR due to both wave increase and the premium expansion that typically happens when sentiment shifts. But I don't trade based on technicals alone, I care more about fundamentals and catalysts. I also looked at the macro setup because crypto doesn't trade in isolation. I found several catalysts on the horizon. Catalyst number 1, regulatory clarity. The crypto market structure bill is reportedly 90% complete. If this passes, it ends regulation by enforcement and establishes clear rules. That's huge for institutional adoption. Catalyst number 2, Fed policy. The Fed is ending quantitative tightening. That's $40 billion less selling pressure. Plus, there's a 75% chance of a December rate cut based on current market pricing. More liquidity in the system is historically bullish for risk assets like crypto. Catalyst number 3, Ethereum upgrade. The Pectra upgrade goes live December 3rd. I looked at previous major upgrades. In May, Ethereum rallied significantly after the upgrade following a prolonged drawdown. History doesn't repeat, but it often rhymes. Catalyst number 4, stablecoin adoption. I tracked stablecoin volumes. 40% of Ethereum transactions now involve stablecoins. That's an all time high and growing weekly. Stablecoins are becoming the rails for institutional money movement. Alright, let me pull this all together with my analysis based on everything I've researched this week. The bear case: sentiment is terrible, price action is brutal, and we could see more downside if Bitcoin breaks $80,000. The technical damage is real. The bull case: fundamentals are stronger than ever, institutional accumulation is happening, BlackRock is launching staking, BMNR is setting up infrastructure for long term value creation. Technical indicators are flashing bottom signals. My take: I think we're in the late stages of a correction, not the beginning of a bear market. The risk reward at these levels looks asymmetric to me. BMNR is now trading near NAV parity. That means you're essentially buying Ethereum at fair value, but you also get future staking yield, dividend infrastructure, professional management, and institutional grade infrastructure. I've been adding to my position through this drawdown. I bought more shares this week under $30. To be clear, this is not financial advice. I'm just a guy analyzing data and sharing what I found. You need to do your own research and make your own decisions. But based on my analysis, I believe we're seeing one of those rare moments where maximum pessimism creates maximum opportunity. The question you have to ask yourself: do you believe in Ethereum's long term future? Do you believe Wall Street will tokenize trillions in assets? Do you believe stablecoins will continue growing? If yes, then BMNR at these levels might be worth a serious look. What do you think? Drop your analysis in the comments. Are you buying this dip or waiting for more blood? If this research was valuable, hit that like button and subscribe, because I'll be tracking BMNR every week as this story unfolds. Thanks for watching, and I'll see you in the next one.